What's going on, guys? Welcome back to Profit Maximalist, a show for crypto traders. Today's guest on the show is Avi Felman. And Avi is a trader over at Blocktower Capital, which is a crypto hedge fund. And we look at funding rates for Bitcoin and funding rates for the entire crypto market. If you don't know what funding rates are, it's something that a lot of traders have been focused on lately as funding rates got really high. Funding is the amount that you have to pay to keep a margin position open as you borrow money to lever up, let's say 10x or 100x. You have to pay to keep that position open. A lot of traders have pointed to funding being ridiculously high, and that might be the reason that Bitcoin crashed. I wanted to ask Avi because I understand funding rates a little bit, but I think there's more to it, and we dive deep in this conversation. So if you're a trader, you're really going to enjoy this one. We also talk about this weird phenomenon going on where Bitcoin's done very well during US trading hours, and during Asian selling hours, everything in the crypto market sells off. This is a really fun episode for traders, so if you do trade Bitcoin or any crypto, you're going to find this pretty informative. It goes in depth. He doesn't hold back. He talks about specific things you can look at for your trading strategy. I think you're going to enjoy. And one more thing before we start this episode, remember to subscribe right down below to the channel. Hit the like button if you've been enjoying these shows. And with the market this volatile, we just had a nasty drop for Bitcoin. We're still up like 40 or 50% from the all-time highs. There's a lot of stuff to cover. So I'm going to be doing market updates every single day. Subscribe right down below so you guys don't miss them. And one last note, I recorded this episode last week, so we don't talk about the drop that just happened today, but everything discussed will still help you as you trade some Bitcoin. Enjoy the show, guys, and I'll see you in the next one. I've hit the big red button. We're live. Another episode of Profit Maximalist. Today, I am joined by Avi Felman. Avi, thanks for taking some time away from the trading desk and joining the show, man. What's going on?
Yeah, of course, Luke. It's going well. Kind of hard to be upset in any market that just goes straight up when you're long biased. So
it's weird though, like straight up, we were talking about it right before I just hit record. This is a weird market to trade. Like this is unlike anything. 2013, we went straight up. 2017, we went straight up towards the end, but like it's trading differently. Like there's no volatility. We're just going straight up.
Yeah, it's pretty nuts. And I think a lot of it just has to do with the new type of buyer that's in the market. In the past, in 2013, 2017, you just had all of these new retail participants that were pushing the price of Bitcoin up, right? And pretty much everybody that was buying, that's what they were. They were a retail participant. They were an average person. And so they very much acted like one in that if price went up 20% and they bought and it went down 5%, they got really worried because they were thinking in terms of, oh, this is the price that I bought at. I'm trying to make money on this in the short term, not necessarily have a massively long-term view on this. And so that led to really, really sharp price retracements in like 2017 and 2013. And now it's just these big guys that are buying for 400K price targets. It's funny. It's like the crypto native guys are thinking, oh man, 100K, like that's a great target. And all the trad guys are coming out and they're saying, well, 400K sounds good. They're like blowing our bullishness out of the water.
Yeah. Yeah, that argument for catching up with gold's market cap, I mean, that's what everyone said now. Chamath was just on CNBC saying that. You had the Guggenheim CIO. He said that a few weeks back. I mean, that's just normal now to say Bitcoin's going to hit 500K. Like, that's just what they're all aiming for. I guess if you're that big of an institution, these funds getting in, those buyers you were talking about, they're not getting in for a 10 or 20% move. I guess like retail's still playing a role, though. Can we get into an environment where in the past, if price would start moving down, retail will kind of rush for the exits, and you have this momentum swing back and forth. You know, we'd move up 20%, rip back down 30%. Can that happen again if this continues on for too long? Or how do you kind of think we're just at a weird spot? It's like, are we still early? Is this late parabola? Like, you know.
Yeah, it's definitely a weird spot to be in because kind of the call that you have to make is when do institutions stop piling into this trade?
Yeah.
Right? Because right now, it kind of doesn't matter how many retail participants come in. There's just so much more money that's being plowed in by these institutions, by these high net worth individuals, by these billionaires that are buying on a long-term time horizon that maybe they cause the 10, 20% dips that we've been seeing, but they're not really enough retail participants, and there's not even enough leverage in the system right now to cause those 40% crazy pullbacks that we saw in 2017 until the point where you see that there's a lack of spot bid in the market because institutions have decided to themselves, this seems like it's run up too much too quickly, and I'm just going to take a pause and I'm going to buy back later.
Yeah.
But as long as they don't feel like Bitcoin's too rich, and that's a very subjective thing, but as long as they don't feel like Bitcoin's too rich, that's why you're not going to get these crazy drawdowns because it's just a new type of participant in the market.
You said something there, the spot bid, and this is something that, it's come up a lot. Institutions are buying up spot, and this has been a spot-driven rally, which kind of points to why I wanted to have you on the show. There's been so much discussion on CT. There's always, people create these things to worry about as you move up. You can come up with a million reasons that Bitcoin should go down, the same way that you can come up with a million reasons Bitcoin should be worth 400K. And one of the reasons that people have been pointing to is how high funding rates are. And it has some traders, especially the people on Twitter, freaking out. They're saying, man, look how high funding is. Whenever funding gets this high, we're going to crash. I'm just quoting, the average trader on Twitter.
Yeah.
I understand funding a little bit, but I don't understand it enough to even know if they're right or wrong. You shared a pretty in-depth thread looking at funding. What's your take on funding rates this high? Is it really a cause for concern when funding gets this high? Are we due for a crash in like the next week? How does that work in this Bitcoin world?
Yeah, it's a really important question because for the longest time, the derivatives markets just ran the show. They just completely ran the show. And so you could get a good idea of what the market was going to do just by looking at funding rates. And to take a step back, what a funding rate is it's a way to keep perpetual futures in line. So perpetual futures are just those futures that never settle. They don't have an expiry date. So you need some way to get them to converge to the spot price. And what exchanges like BitMEX did, that what they actually invented was they charged users a certain percentage based on how far their product was trading from the index price. So if Bitcoin's trading at $10,000 on BitMEX and $9.99 on Coinbase, then you get charged some amount of money in order to hold that long because they're trying to incentivize people to come into short.
Yep.
And the shorts actually get paid money to be short because they're trying to converge the prices. So that's kind of the concept of funding rates. So it basically what it tells you is how aggressive derivatives buyers are in a market. It tells you what derivatives buyers are trying to do. Are they trying to go long? Are they trying to go short? And how much money is kind of behind this, right? So how much money is pushing it long? How much money is pushing it short? So the higher the funding rates, the more aggressive derivatives buyers are, and the lower the funding rates, even negative, they get sometimes, which is kind of crazy to me. It's like going just like absolutely net short Bitcoin is always interesting. But yeah, so funding rates when they go negative, the shorts have to pay to be in that position. So what it can tell you is kind of interesting. It tells you the positioning of the market, and it tells you who you might want to be betting against.
Okay.
Because a lot of derivatives traders use high leverage, and when you use high leverage, it's easy to shake people out of positions.
Sure.
And easy to just like get people that are playing in the markets. If price moves against them, then they'll often exit their positions if they're on extremely high leverage. So it causes a lot of forced selling in the market. So if people are really, really, really long and levered on derivatives and price moves against them, that can often cause a lot of people to unwind and can cause excess price movement, which you can basically bet against, right? So if a ton of people are exiting their positions purely because they're on high leverage, then you can buy that. And if a ton of people are exiting because they're on high leverage and price is going up, then you can sell that, right? So that's one way you can use funding rates.
Do you think we just had a drop? I can't even really call it a drop. Bitcoin's still at 41K. If you go back like 24 hours, it was last night. I think we were down 6 or 7%. If you look at the daily candle today, we've ripped right back up. Before this dip, there was another thing that happened just like this. Bitcoin drops 20%, one of the biggest drops we've had since March, and immediately gets bought back up. But before that dip, there was ridiculously high funding. Do you think that, exactly what you just described, a lot of traders got too aggressive with the derivatives? Someone thought they could shake them out. As they start to unwind those positions, it just represents a really great dip buy. Like, how do you play it as, if the funding gets too ridiculous, you're looking to hedge out, or how do you actually make a directional bet off that? Is there like a certain level it needs to get to?
So this was a lot easier 6 months ago to make a directional bet based on funding, because back then there were fewer people looking at the markets, looking at the funding rates specifically, and B, there was not as strong of a spot bid, so derivatives had more of a role to play.
Okay.
The one most important thing that I don't think people actually look at is what is the total amount of leverage in the system? So what amount of Bitcoin's market cap is represented in open interest? If you have massively, massively high funding rates, let's say that funding rates are roofed and they're max for 3 weeks straight, but open interest is like 500 million and the market cap of Bitcoin is 500 billion, that doesn't actually mean anything.
Sure.
Because there's not a lot of economic activity that's pushing those funding rates. And there's not a lot of like excess price movement that can happen because there's just not a lot of like interest in derivatives, right? And so what you have to watch out for is extremely high or extremely low funding rates in periods where open interest represents a substantial portion of the Bitcoin market cap.
Sure.
And so that's actually been a fairly good signal. One of the most useful things that I've managed to use is looking at open interest as a percent of market cap. When funding rates are roofed and open interest as a percent of market cap has stalled, that's normally a good place to start taking profits, because what that means is people are extremely long. But if open interest is stalled, if it's flat, that means there are no more marginal buyers in the market, right? So it means that everybody that's in a position is already in a position, and Bitcoin price, if it's not going up, that means that once these people start closing their positions, it's got to go down if there's no marginal buyer, right? So that's actually pretty interesting. One of the like a specific number is about 2 to 2.5% of market cap. If that is represented in open interest, has been a pretty good signal to start being worried if funding rates are extremely high.
Interesting. So, I mean, the more people look at this, obviously the less edge there is. And what you just brought up is it kind of makes me laugh now, because everyone yelling about funding rates and being all scared about it on Twitter, this has been a spot-driven rally. So, derivatives have just mattered less. That's just how it's been. Yeah.
It's funny. So when we were at 33K, we were pushing up against that 2% limit over there, and basically ever since then we've been pretty low. And so the sell-offs have been just less severe, because even though funding is roofed, there's just not that many people compared to the spot bid to liquidate, right? Sure. And so if somebody's plowing in 500 million to the spot market and there's a billion to get liquidated, that's not going to cause a 30-40% drop like it may have been before, when there was much less spot bid compared to derivatives.
Okay, cool. All right, that's some free alpha right there. The other thread that you shared this chart, actually, this was a few weeks back, maybe it was a couple months back, and I think Ari actually posted right below. He said, "Man, stop sharing all that alpha." There's been an interesting phenomenon going on between Asia and the U.S., and you shared the returns if you were to long Bitcoin during U.S. trading hours and short Bitcoin during Asian trading hours. That's somewhat persisted. I think maybe it's broken in the past week. It looks like Asia's finally getting bullish on Bitcoin. Why do you think that exists when there's we go through U.S. trading hours, we're very bullish here in the West, and then go over there and they're bearish? How does that happen? Is it information differences? Is it bias differences? Or is it just there's a massive buyer only here in the U.S.? Like, how does that add up?
It's pretty funny. I feel like half the questions in this market can just be answered by, oh, there's a huge U.S. spot bid. Yeah. That's just the answer to a lot of these questions right now. It's funny. When I shared that chart, I kind of thought that it would decay. I thought that it had been going on for so many months that I was comfortable sharing that chart on Twitter, because I was like, how much longer can this go on for? It's still happening. It still is a fairly good signal. And I really think the reason is because there's just so much OG supply out of China, and there's so many new buyers out of the US that just creates a dynamic. The US buyers will plow in, and then OG Asian buyers that bought in like 2013, 2015, 2017, they're just offloading. They're just like continuously offloading. And one of the clearest ways you can see this actually is using something called CVD, which is cumulative volume differential. All it does is it takes market buys and market sells, and it subtracts market sells from market buys. So if there's 100 Bitcoin worth of market buys and 200 Bitcoin worth of market sells on a particular exchange, CVD will be negative 100, for example. On Binance, there's almost always a negative CVD, which means that there's almost always a net seller on Binance. And on Coinbase, there's almost always been a positive CVD, which means there's a net buyer. And this is over the last year, I'm saying. Yeah. And so it's kind of nuts. There's just this consistent selling out of Asia, and there's a consistent buying out of the U.S. One little piece of information that I found kind of interesting is that people are getting really excited about the kimchi premium right now, or the South Korean premium. What's really interesting about that market specifically is that they're super, super alt focused. They're extremely altcoin focused. So people saw that and they thought to themselves, maybe this Asian bid is gonna come back. Maybe Bitcoin's actually going to be bid during Asia hours. And that hasn't really happened as much as people have thought, because the South Korean buyers are punting things like Stellar. They're punting things like XRP. If you look at Upbit, like the vast majority of days, like some altcoin will be trading higher volume than Bitcoin. Bitcoin's kind of an afterthought, actually, for as far as I can tell. And the volume differential between Bitcoin and other altcoins on Upbit is much smaller than on things like OKEx and Huobi, where Bitcoin's usually the most traded.
Yeah. It hasn't always been like that, though, right? Like the kimchi premium in 2017, that was when South Korea was, I mean, they were pumping Bitcoin. I think it was like, there would be nights and days where it was 5 or 10% higher. Then we get to U.S. trading hours and we were like, oh my God, how high are they going to take this thing? Were they always that alt focused, or is that like a new phenomenon here in 2020, 2021?
They've always been fairly alt focused as far as I can tell, and as far as the data is telling me.
Yeah.
But it's in 2017, I think everybody was new.
Yeah.
And so a little theory right now is that right now the vast majority of retail that's in the market is just retail that was around in 2017 that's coming back.
Okay.
And they're doing the things they were doing near the end of 2017, which is punting alts.
Sure.
And at some point we're going to get this wave of new retail that's going to buy Bitcoin. But for now, it seems like most of the retail that's coming in is 2017 retail that's just coming back into the market.
Looking to hopefully play that exact same cycle. I've been so curious with the, this U.S. bid that's persisted. And this is, I started tracking it, September, October, when it just became almost a meme. Like it was so pronounced. We would all joke about it. Man, we're just going to get kind of screwed on Asian hours. You're going to wake up to lower prices and then you buy in the morning. I've just been so surprised why the buyer in the U.S., whether it's Michael Saylor or it's some other institution or it's some fund that hasn't announced they're getting in yet, why don't those guys just buy during Asian? Like, are they really doing it when their offices are open? Like, so someone asked me that on Twitter. I was like, look, during U.S. trading hours, we're just moving more Monday through Friday. On the weekends, we've been flat or down. And they're like, why the hell wouldn't they just buy on the weekends too? I don't know.
There's a pretty interesting reason behind that I don't think I'll go into for today.
Okay, that's fair enough. Well, gives the listeners at least something to think about. But that's just been wild to see the geographical differences. But it makes sense if there's a big U.S. spot.
But to your point, it does happen. To your point, it does happen, and that is what's happening. And there's an interesting reason behind it that if you think hard enough, I think you'll be able to figure it out.
Okay, we'll follow the trailer crumbs there. Big U.S. spot buyer. Asians are liking the alts. I think people will find the answer there. Anyways, man, what else is going on? Anything else interesting? What are people missing, I guess, as I kind of leave this? Those are the two big topics I wanted to hit. Funding, people are worried about. I think that answers your question, is the U.S. spot buyer. And I think it also answers the question geographically what's different. But what are people not looking at that you've kind of been interested in lately? It could be a theme. It could be a sector. It could be, a little piece of alpha. It doesn't have to be anything too secret. But what's keeping your mind running right now?
What's keeping my mind running is I'm a huge, huge believer and proponent in the DeFi ecosystem. And at some point, I believe that there's just going to be a massive repricing across the board. And I don't know when, and I don't know how, or I know how. I mean, people are going to buy it, but I don't know exactly when it's going to happen. But retail is going to figure it out. The new participants are going to come in and they're going to figure out the DeFi market, and they're going to start trading on Sushi. They're going to start trading on Uniswap, kind of similar to what was happening in August and September.
Sure.
And so really, I think that there's going to be a huge, huge flow into that ecosystem in a way that we saw with ICOs in 2017. And that's going to be almost like a generational opportunity for everybody that's in the market right now if you pay close enough attention. Yeah. So I'm paying very close attention to that space right now.
And do you think that's going to be to the detriment of like these, older coins, let's call them zombie chains that are still trying to compete with Bitcoin, maybe some layer ones that just kind of stuck around, but there's not really anything happening? Or is that, do those things rise?
I think so.
Okay.
I think that it's kind of funny, right? So in a market like this, People will buy things that they're familiar with.
Sure.
And so these 2017 coins, they're going to go up because people are familiar with them. But at some point, I really believe that retail will get smarter. I'm not saying that they're going to get extremely smart and sophisticated. I'm just saying that they're going to gravitate towards the things that the crypto community puts at the forefront, right? And the crypto community, we don't put EOS at the forefront. We don't put like BCH at the forefront. Like while they're like large projects and they retain a ton of market share and
awareness,
and awareness, and they're not like, whatever your opinion is on them, like they're widely traded. The crypto community doesn't like push them to the forefront of everybody's thought or talk about them very often.
Sure.
And so if you become involved with the crypto community, what do people talk about? What are people really interested in? What content are you going to consume as a new investor in the cryptocurrency space? What are people going to tell you to do? And I think that all roads lead to DeFi in that sense, right? Yeah. All roads lead to almost Uniswap, right? I think Uniswap flipping is going to be the ICO flipping of 2021. So that's kind of my bet. And I think that, for example, EOS and BCH and LTC and all of these 2017 coins, they all still have development on them. It's just lesser, and than what's happening in DeFi. And I think that people will hold them. But if there's more interesting stuff happening elsewhere, they're going to go there. Although I will make one point. I've tweeted about this a little bit, and what gives Bitcoin value is the fact that it's just like a complete meme, right? Like people just decide that it's digital gold, and they're just like, all right, this thing is digital gold now, so I'm going to buy it, and it's going to go up, and that's what's happened over the last decade. I don't see why that can't happen with something else. Like I see no reason that. People talk about LTC and they're like, oh, it's a completely useless coin. And whatever their opinion is on it, if retail decides to bid this thing up and treat it as digital silver, it will become digital silver. Now, I'm not making that bet personally, but it's just a reminder to keep that in mind, that this entire industry is built on memes, and that in 2 years, if every single person has bought Litecoin because it's the silver to the gold, like don't sleep on that.
It's gonna be
right?
Yeah, that's a hot ball of money, and there's going to be a lot of money flowing around from these Bitcoin longs that unwind. So, yeah, it's going to be fun to watch. Well, Avi, I appreciate you coming on, dropping some alpha bombs. Geographically, funding rates, I think those can both be answered by there's just a large U.S. spot bid. That's all it is. The DeFi stuff, the alt stuff, that's pretty exciting for people listening that kind of think they missed out on the DeFi wave. I also think even if more people don't go to those, like retail number wise, the actual number of people that go to them, I think the people with the money that kind of eat away those inefficiencies will be moving there. So it's definitely gonna be something to watch. Could be a DeFi season 2. Anyways, Avi, I appreciate you coming on, man. It's got to be a busy week for you guys over at Blocktower. So thanks for taking time out, man.
Yeah, for sure. Well, thanks for having me on the show. I appreciate it, Luke.
Of course. Yep. Have a good rest of the week.